Private equity used to make big bets on malls and retailers if they wanted exposure to the consumer. But with declining foot traffic and, of course, the uptick in e-commerce, PE has turned its attentions to warehouses. Blackstone, the biggest player here, with a whopping $90 billion in warehouse assets, distribution facilities for the logistics that support e-commerce. The pandemic, of course, has turned warehouses like this one, owned by Blackstone and operated by others, located in Clifton, New Jersey, into gold mines. Every $1 billion in additional e-commerce sales requires more than 1 million more square feet of warehouse space, and that's pushed up valuations for many warehouses, especially those located near big urban areas like this one, and it's allowed owners to charge more in rent.
We've watched for a decade as year after year, e-commerce penetration and therefore demand for warehouse space has increased. And COVID has really just accelerated that trend. In particular, I think many consumers who maybe were not typically users of e-commerce have been converted by the pandemic. And therefore, we see this kind of demand for the spaces we own continuing post-COVID.
In 2020 commercial real estate, this area has been the key bright spot for investors. But as some firms look to making future investments, the question becomes, has this area gotten too hot to support the kind of e-commerce demand once the world returns to normal?
Shepard Smith here. Thanks for watching CNBC on YouTube.